Welcome back, part 2 of day 2. Home stretch, but I'm really excited about the second part because we have 2 fantastic keynote speakers joining us this afternoon. But before I get to my keynote speaker, I'm going to get real quick to our session moderator. Really excited for Paul Harris to join us here in Frankfurt. He's been a moderator on and off here at Deutsche Goldmesse for a while. We've known each other for also like 10, 12 years. I think we met on one of my first site visits down in Colombia at, oh my goodness, Quora Resources, I think it was. One of the first clients we worked with. So Paul's joining us from Medellin, Colombia. So he's had quite a trek to come out here. Fantastic journalist, writes for the Mining Journal, and of course is a KitGo mining host here at the conference. Thanks so much for coming, Paul. Thanks so much for hosting. Make sure everybody stays on time, please. Okay. Really, really important. Without much further ado, I'm just going to introduce Eric Strand. We've had him on, he's been a keynote speaker before, I think it was a year ago. Yeah. And really happy to have him come back and join us here in Frankfurt. He's Stockholm-based, so again, somebody else who took a trip to come down to Deutsche Goldmesse, which again, I've mentioned it before, thankful for it, and really appreciate you coming out. We've had interviews with him on the past on our YouTube channel as well, and he's going to talk about sound world and sound financial system, and of course, how does the investment strategy fit into that? How can we all make money with him or without him? But through the AuAg Funds, and it's going to be interesting. Going for gold. Eric, thank you so much for joining us, and take it away.
Thank you very much. Well, I start with this page because this is about what we do. We invest in the elements. And our brand, AuAg, most of you know it's gold and silver. We actually invest in all metals today, but it's metals and the elements. And always when you get this question, why gold? Why is gold gold? I mean, somebody says it's a rock or a stone, but it's not. It's a metal. And that's why you have to dive in why gold is gold. And it's actually the unique properties of the elements that is important. And so that's why you start to get interested in silver. What can it do? What can it not do? What can copper do? So the properties, the unique properties of the elements, that's where gold and silver comes from. And that's really, really important to start with that point. And I don't know if you know the background. It's on our homepage, but it's the periodic table or periodic system. You have all seen it? You have all forgotten it? I hope, or not. No, I hope it becomes more into our world. And AuAg is a young company. We started 2019, so only 4.5 years old. I've been in business for all my life, so that's a little bit longer than that. And 2019 was also the year that when the periodic table celebrated 150 years. So now it's 154 years ago when they created the periodic table and organized all the elements. And today we are asset managers. We have 4 different funds. I will speak about one today a little bit. And we have close to 200 million euro or dollar, almost similar, under asset management. So, and we have a bit different approach that maybe you heard to the small companies. We don't go for the really small companies. But the good thing is we bring money into the sector. And more money into the sector will be that if you buy the small companies that are here, one day we will buy them and you will make more money. So it will be good for you. And also when I entered this precious metal sector, I realized all these people with funds or physical gold, physical silver, they were like competing very much with each other. So this 1% of the market, and they were, oh, we are better, we are better, we are better. I mean, 99% of the money is out there in different other funds. So that's what we are going for, the other 99%. And we are based in Sweden, but we are going for Europe. We are actually have 40,000 investors. We want to double that. I mean, we've only done it for 4.5 years. At least double that. And actually, if we could go for Germany, we have passported our funds to Germany. That would translate to 200,000-300,000 investors. So not just the 200 that are here, 200,000-300,000. And if they all, even if they go in with small amounts of money, that would be a lot of money into the sector. So I think we all help each other. So let's go on for today's topic a little bit. The team, going for gold. Thank you, Kai, Rachel, for doing great work. And 2024, maybe the year for gold in many ways. And one way here is the Olympic Games. They are coming very soon. And I want to talk a little bit about that. Because gold, silver is money. But also if you look for sports, the winner, what do they get? A gold medal. Number 2 gets a silver medal. Number 3 is a bronze medal, which is like 85% copper. So these are the important elements also in sports. The best gets gold. And now we have the Olympic Games coming up, and I think it could be good to know something about the gold medals. It's the 3rd time that Paris is hosting the Olympic Games. You know when the first time Olympic game was? Anybody? 1996. I heard 1896 in Athens. And 1900, it was in Paris. 1924 in Paris. So it's 100 years ago. It was last time in Paris, and the 3rd time Paris is hosting the Olympic Games. And the gold medal, unfortunately, it is not gold, or it's not pure gold. So it's only 6 grams of gold, and that's the outside. And the rest is silver, sterling silver. So it's actually a silver medal plated with gold. Oh, but there were some Olympics where it was pure gold. Up until 1912, Olympic Games in Stockholm, it was pure gold. So after that, it became gold-plated. But something unique that you can know when you meet your friends during the Olympic Games, when you watch it on TV, is there is another medal this time. Not just gold and silver on the gold medal, and you can see it. Anybody could guess? Yes, so it is. What is the metal? Iron. Eiffel Tower is 100% iron. So this is actually one piece from the Eiffel Tower. So it's not just iron. So it's like very special design gold medal. So something to know, 6 grams of gold. Now you know everything about the gold medal. Myself, I actually took part in the Olympics 1984. I didn't win any medals, so I have to invest in that instead. But anyway, so very short, because actually slide number 9 is where the nuggets are coming, the interesting part. So I will be a little bit fast on these ones, what we do. And we create funds, and we see it as an art or craftsmanship to design funds. And well, let's see. We don't want to have competition within the sector, but the ones that we want to beat and take some money from are the big ones. I mean, the largest fund company in the world, it's called BlackRock or iShares. That's where we want to get some money from, and also new money, of course. So what is important is trust when you create a fund, and our funds are what we call UCITS funds. That means it's the highest protection for retail investors. So you have no counterparty risks on the fund managers as us, our fund company, or the custodian where the shares are. So no counterparty risks. Of course, you have risk on the investments themselves, the companies that we own, but around, there's no risk. Very important, institutional investors can invest through us, but also retail investors, and we are in Sweden, Norway, Denmark, Finland, and we have passported for Germany, but we haven't fixed. You need an extra tax to get the lower tax things in Germany, so we are going to get that. So we can market. We can already market for Germany, but we want to get that tax thing done. It's very special in Germany. We don't need that in Sweden or Norway, but in Germany you need that. So. If somebody knows about the tax rules for that, you can please contact me afterwards. What we do is that you should know what you buy. That's our concept. So we don't time the market. Even if we think we know something about the market, we don't go in or out. So if you buy the fund, if you would do, you know what you hold. And always fully invested, so it's like 99% invested. And transparency is for us is not to be a black box. So we have all the holdings on our webpage, so if you want to copy them, you can copy them. If you want to buy the fund, which is easier, you can buy the fund. So no, this is also very important for us. And we have no fees to buy or sell the funds, no lock-in, so you can buy one day and you can sell the next week, whatever you want. And we want to challenge the peers. Also, as I said, we want to get new money, but the peers are the big ones, not the smaller players. And that's we make that with the smarter funds and lower fees. So instead of having 1.75 like BlackRock, we have 1.4, and a large total costs are also much lower, which makes it more money for the investor. And we are designed to perform. When I say perform, there are, of course, companies that can show very high percentage of performance. We just want to be better than the sector like ETFs. So I will talk about the Silver Bullet Fund today. And of course, the big one in the market is the SEAL, the ETF. Everybody probably knows about the SEAL. And we just want to be better than that fund. And I think that's good enough. And if we go for the Silver Bullet Fund, it's our flagship fund, our first fund, close to it's 90 million euro now, so it's rather big, focusing on silver miners as good as possible. We are a bit larger companies that are here. We need like $200 million market cap because we need liquid stock so we can buy and sell every day. But these companies that are here, even if they're not 200 million, they will be one day. And if you buy them now and we buy them later, it's good for you, and hopefully it will be good for us as well later on. And this is a chart. I don't want to show charts that we are good or not, but I mean, this is not so good, but we have, for being a silver miner, and we are a little bit more expensive than the SEAL because it's an ETF. We are an actively managed fund. And you see we move very similar, but still it's 25% in less than 5 years. So if we are 5% better than SEAL, after cost, I think it's a good opportunity if you want an easy exposure. Silver Bullet. We like the name. I hope you like it too. We market it as the most risky fund in Europe. Actually, I mean, for regulated UCITS funds. There are more crazy stuff out there in the market, but if you take all the regulated UCITS funds in Europe, but of course, that's depending on volatility, and volatility is not always risk. I mean, if it's very low valued, I mean, it can be very low risk, but the volatility is there because silver is, I mean, commodities are volatile. Silver is probably one of the most, lithium is much more volatile today, but from old time, silver is very volatile, and if you go for equities, that is also volatile. You get a cocktail of volatile assets, and the only thing that makes this a little bit less volatile is that we have a fund. So we have 30 holdings. So we take some company-specific risks away, and I think that could be a good concept. But the Silver Bullet, we like the name because the Silver Bullet is like, in folklore, the only thing where you could kill a werewolf. And I don't know if it's the big banks or the werewolves. No named. But also, Silver Bullet is what you call a very easy or magical solution on a complicated problem. And penicillin, as an example, was like a magic bullet. It's a very easy thing, suddenly, and you solved a lot of different problems. So Silver Bullet is the name. And of course, it's a fund with the holdings, and you can see more if you ask me or on our webpage. So, very short on our outlook for 2024. I don't like to do outlooks, I mean, because everything depends on how much money they print. And I don't know how much money they're going to print, so it's very difficult, but I always get asked, so in the end I have to do one. I did one for 23, and I said gold would go up 20%. It didn't. It went up 13%, 13.2. Yeah. Ooh, yeah. So what did I do? I said, this year, 20%. And a lot of new all-time highs. So one thing was that we really wrote, you can see it later, that we see a lot of new all-time highs. So we can click that at least. And we also said that the gold to silver ratio would come down when the secular bull market is ending, maybe to 30-1. That's normal ratio. Actually, I'm a big silver fan, so I think we can go much lower because silver, I mean, in Earth, it's 16-1. That's the price that Newton gave the silver-gold relation. It's 16-1. We're actually only mining down 8 or 10 to 1. And silver is crucial for everything we have, every mobile phone, every computer, sun, solar cells, everything we do, electrification of the world, every car you cannot, EV, in an EV you need 20 grams, or not, a normal car you need 20 grams of silver. You cannot do a car without these 20 grams. So whatever the price, Mercedes, Audi, they will pay whatever it costs because they can't do the car without the silver. And an EV needs 40 grams silver, still not a lot, but it's twice as much. So for 2024, we hope or think that we will see it to 70 to 1, on the road down to 30 to 1, and then maybe even lower some years forward. And again, as I said, we hope that gold will close 20% higher. That was a bit maybe a bold statement then, as I was wrong, 23 with 13%. But now, gold 2,300, almost to 2,400. It's like almost careful prediction. We can go higher. And actually in March, I mean, even JP Morgan says 2,500. So 2,000 or 20% this year shouldn't be bad. And I think, of course, we think the mining stocks will outperform. And actually, I think it's very funny that the market for us turned on the 29th of February. Because, I mean, it only happens every 4th year. And it's the Olympic years where we started. So I think it can be the day. And we have said some great returns. I mean, the fund, 2 months, 50% up. We have big returns. And so 20% for gold this year, we would end at 24.75. JP Morgan says 2,500. No problem. We take 2,600 as well. And if we get silver down to 71, that would end silver at 35. And that would actually become a 48% return. And of course, the miners, they will more than double that. So I hope for triple-digit year. But that we wrote in December, end of December, so it's still valid. I hope I shouldn't use it next year like you do. Okay. No, I have to up. Yeah. So here we are. Gold has been going up, and we have the gold ball. We have some. It's going down in the end, I see. It's not good. But we have had a strong market for gold, and sometimes I get the question, or I think myself, what is the correct price for gold? When is gold expensive? When is it cheap? And for a long time I've been saying that all gold under 3,000 is cheap. And actually what has happening in the system, in the financial not sound system, is that I will probably have to raise that number a lot now. And you can calculate the fair price of gold in many different ways and make it very complicated. So I try to make it very simple. And very simple meaning that I take the US, the world is about the US and gold is priced in dollars. So how much debt does the US has and how big is the Fed's balance sheet? And I take some zeros away. And then I can see when gold is cheap or when maybe it was expensive and time to sell. One time it is time to sell. And I have it here on my next slide. If it's gold expensive now. And here's the answer. So these numbers are quarterly. I just highlighted some daily highs and lows, but the numbers from the US are quarterly, so it's the price in gold is also quarterly. And actually, gold was, in this easy formula, expensive at the all-time high with 1921 and 2011. That was the only time when the gold price was over accumulation of the US debt and the Fed's balance sheet. And in the end, you see now they are over a gold price that will be like 4,200. So I could start to say that gold under 4,000 is cheap. Maybe we start to get cautious when it's about 3,500, but that's some way forward. But no problem for gold to go to 4,000. It will still be cheaper compared to US debt and Fed total assets compared to 2011. So we have a lot of room coming, and we are looking for amazing good period, I think, in precious metals and all metals. So now I come for the interesting part. That was just the beginning. 9 nuggets that you may take with you or not. Some are more interesting than others, but I try to get something that Claude, you will love one of them. And also, I think I try to get something that's a little bit different, so you don't always hear the same things, because we have a lot of speakers, they do it so good with all their different charts, but try to find something different that is good for the market or not so good for the market. One thing that I would love is for miners. I mean, this is difficult. I don't have the solution, but it's a problem in the market, and that is that miners are price takers and not price makers. And I would like to get a shift in that system, because if you see Apple and iPhone, they are price maker. They put the price. I would like miners to say, this is the price for gold. We don't sell it before we get this price. So that, I think, would be a big change. I don't know if it will happen, but it's a big thing, I think, for metals or commodities, for miners to become price makers. One way would be, there are some companies that have been doing this, and I like it. It's when they have too much cash. I mean, the big ones are getting a lot of cash, and if they're very slow on buying assets, we want them to buy the explorers. They don't. Why do they hoard cash? Why don't they buy gold and silver for the cash, at least, if they believe in their product? So if they would start to buy gold and silver, some do. I think that's good. Buying assets can be better, but in between, buying gold and silver for their excess cash. Oh, other way. I write very short here, so it goes a long one. I think we have a problem in especially the Canadian stock market. I'm not the expert on it, but I have discussions with the companies because our custodian doesn't want us to buy shares under $1. It's not because the company is bad, but there's too much, it has been too much pump and dump within the sector, not just this sector, but all shares that have, or it's like the cryptos. So you start them at 0.0001, and then it's very easy to get them to 1, and you have 10,000% returns or 100,000% returns. I understand the game, why they do it, but custodians where we have the shares, they don't like that because they don't want to get mixed. Even if the company is good, they say, okay, you cannot buy any stocks that are priced like that. So I want to see the companies don't have the shares at 0.3 or 0.2, make a reverse split, take it back, have it at 5 or 10, and you start to look clean. So also the tax lossing, I think we spoke about that last time I was here. It's not also my expert thing, but I think it's a good idea. You get money back, but the problem is if the market is really soft first half year, all the hedge funds know that people will sell in the end of the year, so they will short the market, and the stocks will go down more, and people will sell more, and the hedge fund will make money, and so it's not good. It's not a good system, so I think it's better to leave it. So I think the venture exchange things has to happen, clean it up a little bit, and I think leave the like the pump and dump thing to the cryptos. I mean, it's not for miners anymore. I would like to see that the refiners, some pressure on the refiners, that they will, where are they sourcing their gold? Is it quality mined, good gold, or not good gold? I think we need to have more pressure on the refiners. It's happening, but it's a little bit slow. Actually, some don't like ESG. We like ESG, sustainability, and very short there. When we talk with companies about sustainability, they are actually very good at talking with us, and they are very good at working on sustainability questions. Very good. The miners are really, really good at this. Some, they don't like the reporting, but what I tell them is, we own your stock. It's your stock to the company. And if you fix this a little bit, do your work, do your homework, you will get more institutional money into the stock. And that will be good for you, and it will be good for me and our investors, because then the price of the stock will go up. So just do it. It will be good for you. So it's easy money to become good at reporting on your sustainability. And you don't have to hide, because metals are enabling the future. Metals are enabling anything. We are in the third metal age. The first metal age was when we created the knife, bronze and iron age. That was the first metal age. The second was like end of 1800, when we started to make trains, cars, aeroplanes, buildings with metals. Now we are in the electrification, high-tech world, and it's all about metals. Just metals, 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 and we will need a lot. It doesn't matter if they call it AI. You know these AI centers, how much copper they will need to run these AI centers for the computers? It's a lot. And silver. Very short on the COMEX. This is a one-off possibility, and this is the problem why we get this downtick, because there are a lot of shorts out there on the COMEX. They were actually $20 billion in unrealized losses on their shorts. Now they got the price down a little bit, so maybe there are $15 billion unrealized losses on their shorts. Let's see who wins, if they can get the price more down, or if they will have to give up one day and try to have to buy back the shorts. It's a big battle, and it has not been very good regulated. But if you're investing now, if this manipulation that's going on there with the big banks, if it ends, I mean, prices will take off really fast. So it's like for old investors, it's a bad thing. If you're new in this game, it's a one-time possibility. I think price of silver could double very fast if this would end. And it looks like a physical shortage will be the thing that ends this COMEX manipulation. Then this one is very interesting. I mean, we are mostly European investors here. And it's the leverage of miners compared to the commodity. And this becomes interesting, because if you play with a game that it's a 2 times leverage return, up and down, for miners compared to the commodity, that leverage happens before the FX, the currency change. So when we have a period when the dollar will go down, it hasn't happened yet, but it's in the cards. I mean, it has been strong, and they will probably, even if they don't lower rates first, they will lower more aggressive than the ECB. That's always been the way. And when they do, the dollar will lose some value, and the euro will go up. And for example, I'll make it very short and easy. If gold would go up 20% in US dollar, and the dollar goes down 10%, we here in Europe, we would only have a 10% net return. In US, you would have 20%, but in Europe, we would only have 10%. The miners, if we have the 2-time leverage to play with, on the 20%, they would make a 40% return in US dollar, minus the FX, the 10%. So European investor would have 30%. So suddenly the leverage for European investors is 3-to-1 and not 2-to-1. So when we see that the dollar, when the Fed starts to get a little bit softer, it will be the perfect time to invest in miners instead of the commodity gold for European investors. So it's a very special thing happening. It's the opposite when the rate hike starts, with the Fed going first normally. So now we are getting to the point where miners get a bonus for European investors. So look out for that, or take the opportunity. And then maybe, time is flying. Margin expansion. What is interesting here, miners have been slow going up. Well, March and April was really good, but before that, they were slow. And because of the cost went up, higher cost, now the costs are not going up anymore, but actually, I don't know if you know that, but some people want to buy miners with low mining costs. I mean, it sounds natural. And it's good because you have a lower risk. But for returns, it's actually better to buy a miner with high costs. Because when the price of the commodity goes up, the leverage on their balance sheet, the difference is much higher on the miners with high costs. So you will get a higher return, higher risk, because if the prices go down, they may be out of business. But on an uptick, and now the costs are higher for all mining companies, so that's why they have lagged. If gold stays where it is and continues going up, there will be a very strong force on the leverage of their results, and that we see in the returns, and we see a lot of money coming in on that, so I think this is very, very important as well. And maybe last but not least, gold at 4,000, not impossible in the coming years. And when we get the gold to silver ratio at 30 to 1, we will see silver at 130. So that would be a 70% return on gold. It would be a 400% return on silver. And of course, you will double that on the silver miners. And you're talking about the 10x return. So it's a very, very interesting market. And I can promise you that any recession will be met with more money printing. And more money printing will mean higher gold prices. So a recession would never be a problem. It will be not long-lived because they will go back to 1% rates or 0% rates, do more money because that's the politicians' way to solve the situation. And if you want to follow us, you can take your phone, I don't know if it works here, or get our monthly letter. It's not a big investor letter, it's just a free monthly letter, what happens, what we think is interesting in the market. Thank you. I don't know if there's time for questions now.
We've just run out. Eric, we need to do an interview on that, because I really liked your nuggets. It's really straight out of the box thinking.
Yeah.
And we have a mining CEO here as well talking about price making instead of price taking. How easy is that? Because we've seen one company, First Majestic Silver comes to mind, that started its own mint. Yeah. Right? So is that the way to go? I have no idea. But and how complicated that is. But I really liked your 9 points, and we should do an interview on those because I think they're worth sharing. Because it's a bit different, as you said. Like they're not okay. The U.S. dollar is going to crash, and the Fed is running out of money, and the U.S. debt is about to explode. Eric, thank you so much for coming. I think that was perfect. That was awesome. Thank you so much.
Thank you. Thank you.